This is Back Roads of Illinois, server to farmers and ranchers in central Illinois and the Midwest. Today's edition of Back Roads of Illinois. We are bringing you lasted for farming sources and information sponsored by AgriGold. We're glad you're here on a Monday afternoon. We are going to be listening on the meat sector. It needs an immigration reform for their industry. And then we were talking with Tyler Shau from agmarkets.net on Back Roads of Illinois. This is Back Roads of Illinois.
If we could improve H2A, and we've long argued that we would like to be part of H2A in the meat and poultry processing sector, that would help a lot in alleviating across the harvest part of meat and poultry production, what we could do to enhance our labor force.
Meat sector need an immigration reform for their industry. Julianne Potter is the president and CEO of the Meat Institute. Julianne Potter say that we need to improve the H2 program for our industry.
But that takes capital. And as you know, the market for beef and pork and a little bit in chicken has not been as strong as it was before and during the pandemic. So I think you saw maybe a bit of a slowdown on some of those investments. They will continue, but it is not going to solve the problem comprehensively. We need immigration reform. We need a steady, stable, legal workforce. And no amount of automation is going to take that place. People working in our plants will be repurposed. They won't lose their jobs because of automation.
During the pandemic, that there was an issue of labor shortage. Julianne Potter urging to have a stable for legal workforce for the meat packers sector. There are 50-30% in the meat industry was deceased from the pandemic is in the meat industry for labor. Thanks Glenn Vagine from NW Act Network for this. I'm joining with Tyler Shau from agmarkets.net. Tyler, how are you?
Doing good, Caesar. Hopefully things are good your way.
Let's discuss about these grains markets, especially with the weather premium for right now. What is your thoughts on it?
I'd say my thoughts are there isn't much. Wondering if we will see any. Typically, by this time of the year, we've had some type of at least one weather scare, and then we tend to have a couple more as we move throughout the year. We really haven't had any yet. We've saw good progress being made in getting the crop in the ground for most areas. There are a few problem areas out there, but not big enough to cause a huge stir. It does look like we're going to continue to get some decent rain across the Corn Belt for at least the next week to 2 weeks, and just kind of got traders and managed money traders just kind of have lost interest in buying this market or being long. They're short a lot of corn. They're about neutral on soybeans right there at the moment. So it feels like there isn't much, which tells us, if we get something, we need to be ready. And just a reminder to producers out there, supply scares or supply issues are usually pretty violent, and they happen quick, and they return back to the status quo as soon as the supply scare is calmed. So the lesson there is be ready. If the market does give you an opportunity, we need to be able to pounce and get something done.
How are things in the December corn for this afternoon?
December corn doesn't look all that great. We closed down about another 2 3/4. 435 and three quarters is where we're at. The low recently, which came mid-May in December corn, was 434 and a half, I believe. So we're only about a penny and a quarter away from that low close. There's pretty good support in this 435 area that we've seen really all of 2025. So it'll be interesting to see if we're able to catch hold there, and maybe this is where some weather issues start to pick back up, and or maybe we see some buying come in. So I would say, technical outlook right now, December corn, not a pretty picture with the move lower we've seen starting on May 22nd. But it's be interesting to see if some of these lows can hold here.
Now, we were talking about the planting progress in the Midwest and Central U.S. What is your position on the corn markets for right now?
Well, it sure feels like the planting progress is not an issue really at all. Expectation is for most of the corn crop, most of the bean crop to be in the ground. Wheat, really no issues there as well. So really, I think the focus is going to be now on crop conditions and how those conditions look moving ahead. Market's kind of looking for a little bit of a slight increase in corn conditions based on, had dry down and some good temperatures last week. There's a large portion of the Western Corn Belt that really needs to see some heat, and we got some of that in some places. Um, the other big question mark is going to be on the spring wheat. Came in with incredibly low, good to excellent ratings on the crop conditions, 45%, one of the lowest we've ever seen, excluding two other years, I believe. I live in North Dakota. I would not have expected to see those conditions that low, so I kind of thought they'd be a little bit better. So it was a little bit of a surprise to those of us in our office out here, but I think that's really what we're going to be looking at.
How about in Ohio? How much of maximum liability for the grains markets, Tyler?
Well, Ohio's got some areas where it is raining, it's rained too much, and they're not getting it in. And for those producers, it stinks. And that's what's in the back of your mind. What when we look at it from a global perspective or for a countrywide perspective, I should say, that that reduction in planted acres because it's too wet, most likely going to be offset by the amount of acres got slammed into the ground in the northern plains because we were really dry at the time. So some offsetting. I don't know. I'm sure you'll see prevented plant acres in some states. Don't know that it'll be anything out of the ordinary for a normal year. We always see prevent plant somewhere. And so anytime it pops up in areas where we're not necessarily used to it, you hear some chatter about it in the market, but I don't think it's anything out of the ordinary for a normal year for the entire growing region.
All right. We were bringing it up with the cattle markets with these prices for the feeder cattle. What are you watching about the fundamentals with the cattle markets?
Well, I mean, the simplest thing to say is we're paying attention to the cash markets. Cash fats have not backed off any. You know, talk 235 cash fat cattle sold in the north last week. Over the weekend, 1,000 head got bought off some show lists at 225 in the south. So just massive cash prices being paid. You take a think about 235 and 235 in the north, 225 in the south. That tells us the average cash price of fat cattle is closer to $250 a hundredweight than it is to $200. Until that breaks, fundamentals look awfully good. I think that's the only fundamental you really need to watch. Um, and as long as the cash fats stay good and they're selling them for good money, the feeders got some money they're willing to go spend on cattle to replace them with. So that's holding the feeder calf market supported. Feeder calf index just keeps moving higher. We backed off a little bit there last week in the feeder calf index, but didn't last long. We've clawed back and we're right back to levels we saw before the sell-off and when the market got blasted there in early May or mid-May.
How is the cash cattle side in the north and south on this afternoon?
I haven't seen any trade today. Mondays are usually pretty light, so I have not heard or seen any of the numbers today. Probably hear a few rumblings in the morning, and as we move through the day Tuesday, usually don't see a lot on Monday.
Do you have any final thoughts on the planting season with the volatility in the grains market?
No, like I said, it just kind of waiting on some type of a scare to pop up and give these markets a reason to run higher. And when they do, I think it's important for the producer to remember that we've kind of had a repricing event. We don't really love the sub 450 corn price, but the one bright side is 420 to 430 seems to find some support. So it does kind of feel like we've repriced and put a higher base in versus where we were at in that 2013 to 2020 cycle. Um, and where I'm going with that, we spent a long time between 2014 and 2019 where we didn't get a lot of great pricing opportunity. We never saw that dollar 50, $2 rally that we did in 21, 22, and 23. So our message to producers is have your price targets. Don't get too wild with them. We reach the upper $4 in corn. We reach $11 in soybeans. We probably need to be jumping after that and getting some sales made, just because what we're staring at on the world market, a lot of crop out there doesn't look like production is going to slow down anytime soon.
Where people can find you for your consulting services for their grain marketing? Tyler.
Agmarket.net. Check us out on our website, agmarket.net.
Thanks, Tyler.
You bet. Take care, Caesar.
We were talking with Tyler Shau from agmarkets.net on back roads of Illinois. Thanks to Tyler Shau from agmarkets.net. This has been Back Roads of Illinois. I am Cesar Delgado. You have a good day.